Well, for more on what is happening on the markets, joining us now is Diana Avigdor, portfolio manager and head of trading at Barometer Capital Management. Diana, thanks so much for making time today.
My pleasure. Thanks for having me.
So what did you make of the minutes from this latest meeting from the Federal Reserve? Because they are the first minutes of a meeting where the Fed decided to pause. And it seems like there was a bit of division, at least heading into the decision. However, everyone was on board with the pause eventually.
Right. So let's keep in mind the context where inflation has come down from 9% to where it is now, which is I think around 4%, still not at the 2% that they want. And the economic data has been coming in much better than expected. The minutes, to me, are non-informational. This is stuff that we already knew from the actual hawkish pause that they did, which was very hawkish. We saw at that time that the dot plots, which delineates what each member thinks is going to be in terms of rate levels, was about 50 beeps higher than where the market was pricing in. So we knew even when they came out with their no rate hike meeting that the expectation was for more hikes from the Fed members. And that's exactly what we learned in the minutes today, that most members were okay with a pause. A couple of them wanted to raise, but said, okay, fine, let's wait. There is really no predictive value, in my opinion, to any of this. The central bankers are now as reactive as everybody else by watching the economic data. And of course, they worry about inflation, as we all are. And of course, they're watching the data, and the market's pricing in about a 90% chance of a quarter point rate hike in their next meeting. Honestly, the rate hikes this time around the last 18 months have been one of the fastest in history. Yeah. And it does take time for things to trickle in. My personal belief is that they should pause and wait to see where the cards may fall, but it doesn't look like they're able to not react to the better economic numbers, which frankly is a bit of a high-class problem the economies are holding in.
Right. Yeah, absolutely. Yeah, it seems like almost a good problem to have, but not when you're trying to tackle inflation. When it comes to that idea of being reactive, is that partly just because so much of the data that we have to rely on is backward-looking?
Some of it, well, and your great point, most of it is backward-looking. It's just telling us where we are, except, leading indicators give us some kind of look forward. But you know what is a really leading indicator and a real forward-looking pricing mechanism? The stock market.
Right.
And the stock market has given us a rally this year, at least in the United States. And Europe and Canada needs to catch up a bit. Canada is weighed down by the unsuccessful China reopening as it relates to the commodity prices.
So what message then is the stock market sending?
The stock market's telling you that the economy is still on okay legs. What's really important to watch is the employment number, because no matter how high rates go, as long as people have jobs, they're able to pay their mortgages. It's when you start seeing faltering in the employment data that you have to start watching. Now, we've seen the jobless inch up a little bit, and this is a fine balancing act. We want things to get a little less hot. Of course, we don't want them to fall off a cliff. We want things to be balanced, Goldilocks, and of course, that's a very hard thing to achieve. But so far, so good. And earnings.
Yeah, I'm curious to get your thoughts on Meta these days as well. I mean, part of the tech rally that we've seen so far this year, but mostly because of this week, this potential for Meta to be launching this new app. How impactful do you think Threads could end up being for Meta?
It's going to be impactful, in my opinion. There's going to be a fast take-up. Instagram account holders will have a button where they can just follow, and it'll be an easy, seamless type of new thing to do. How they're going to monetize this is not clear yet, but the uptake, I expect it to be high. And it's particularly nice to see this has been Meta's year of efficiency, so to speak, and it has really benefited. Most companies have benefited this year from cost cutting and being able to become more efficient. And Meta, if you look at the chart, has been a straight up type of chart. So in the year of efficiency, to launch a new line of business, it's good to see, and we'll see. The uptake, I think, is going to be good. Monetization, we don't know yet.
Yeah, is it reflective of that sort of year of efficiency goal, or is there, potential for Meta to be spreading itself too thin when you're thinking about its metaverse and all of that as well?
Yeah, but I think that this is an easy foray into a new product. It's not all that hard to get this going. And they have, they have the Instagram, which is doing very, very well in all age group demographics. So I think that they're going to see without this won't take up too much resources, which is why, in the year of efficiency, they were able to launch this. So it's actually quite interesting to see how this is going to be play out, and monetization will come after.